Welcome to More Trades, everybody. I'm going to look at Bitcoin and other charts to determine what do we expect for the next coming weeks or days. The charts look a bit messy, like a lot of lines out here, but I need to show you some lines that are important for this particular outlay. Now, looking at Bitcoin, as long as you're below the 27,130, there is no bullish scenario. And even if you break that, then maybe you have a slight push up. For now, 27,130 is the value area low of this entire upper range that goes back to 17th of March. So as long as you're below that, let's extend it and see where's the value area low now. It must have moved. All right, our value area low is down here. Okay, so things changed slightly. I needed to update that. Our POC is right over here. Our value area high gets pushed over here. Now we are essentially on our value area low. So when you're trading in a range, which is between a volume profile can be considered as a range, you're between value area low, value area high, and all that. I'll take the lines off now so you could maybe see it clearly. You could trade it as a range, short the highs, long the bottoms. In the end of the day, trading is probabilities. You want to take the higher probable trade. The higher probable trade tells you that as long as when you're at the bottom of the range, you long, you're at the top of the range, you short. Now over here, if I was to long this, I'm not saying I'm going to do that. If I were here, I would long it, and I came here. See, we bumped into the POC almost perfectly, only to get rejected back to the value area low. You would expect that something like this could happen. You might have another push up. Another push up. We might go down here for as long as it takes, or we might have a push up and take us all the way here, push down, another push up, and break low. We don't know how it will go, but as long as you're at the bottom of the range, the higher probable trade will tell you to long. However, the macro is not a bullish chart, and even if we pump up, I would expect it. What I would expect for now is Bitcoin to at least come up to the 26,890. It might look far at the moment because we're at 25,700. That's a $1,000 move. I'm almost gonna bet that we could get there within the next few days. Why? Because every time we had a flush down, we had a pump up, and every time we have a pump up, we have a flush down. We will recover at least 50% of this big red candle that we have here. We've done that. Look at that. When we flushed down here, we came and recovered at least 60. I bet you it's maybe the 61.8% of this candle. Just looking at it, we hit the 78.6, even more than that. Now over here, we had a pump. No one expected us to come back down to these levels. When we hit 31,800, you see this is an insufficiency, and I was talking about this for months when we were just up here in July. And I told you we could really come and recover the whole thing, or we could do something like what we did here. We come down here, then pump up. And Bitcoin on the way up, if you look at the percentage, or if you take Fibonacci retracement from down here to this second peak over here, you would see we retraced 0.5 Fibonacci. Now, if you do the same with the low over here and to the peak over here, the first peak, because the first peak was higher over here, the second peak was higher, you could see again we came down 0.5 Fibonacci, and I was expecting again at least 0.5 Fibonacci, and I'll show you something else. Now this time we came very deep, however we didn't break the 1-to-1. At the moment we are ranging between the 0.786 and 0.881. I believe we could go lower, and I can give you a target for that, but before I do that, I want to show you the last two times Bitcoin came down to the 0.5% fib. After that, at the first time, it ripped up about 59%. The second time, when we came up here, we ripped up 28%. So 30% or 40% is, to be modest, the average of them, to say that Bitcoin could do that again. And if we rip up from here, another 40% from this level specifically, 40% could take us up to 36.2. You have a CME gap over there at around 34 to 36K. If if you go on the daily, and at 34K, you have this gap, 34 to 35K. But now looking at that, it didn't work out. And looking at the chart being bearish, I think you could scalp along. Maybe it could turn to a swing trade. You trail your stop with the trade. So when you are at the bottom of a range, you will be going up. When you're at the top, you're short. Now that I've said that, what level Bitcoin has to maintain to remain bullish? Now on the bigger time frame, Bitcoin can come all the way down to 19K, 18.9K and still be bullish. Because if you consider this whole move up as a 1, 2, 3, 4, I'm going to remove that. If I take the Elliott wave count and we say this was a 1 wave up, a wave 2 down, a wave 3 up, a wave 4 up, down, and a wave 5, and we could be done. Now the next wave would be a wave 2. So essentially what I'm saying is that we could have a 1 and a 2 that could come all the way to 19K, then the 3 would be much larger. If you're bullish on Bitcoin, then you would expect it to come lower. You can't be bullish just blindly. You could do this and maybe something new comes up. But the time it will take, it could drag until March, April next year. It's very possible. So just be aware. Your level to worry about 26.9 and the POC 27.900, or say 28K. 28K preceded by 26.900. So I'll be watching those two next levels. 26.841 is our VWAP. So biggest institutions usually sell above the VWAP, so that means if you pump above it, you'd expect a retrace. Now let's go and look at our EMAs, just to look how extended are we. On the daily time frame, we are below it, so that's bearish. We had a bearish back test. We did that over here. We had a bearish back test and we came down, but then look what happened. Over here, we broke down, insufficiency, instantly recovered. So the story now is a bit different. If we look at it, it's a bit different. We had a breakdown, insufficiency, we recovered a bit of it. So I could say we recovered about, of this big red candle, we recovered over 78.6% of it, or even more. So we recovered the red candle. Now we have another violet candle, but essentially this violet candle would tell me there's a reversal that's going to happen. So it is possible that we get a reversal to the downside. Now, if I'm looking at this as a wave 2 to the downside, and if I assume that the wave 5 ended here, so we're having an A down all the way here, a B up, and I'm expecting a C down. It's already at the 1.272. We could come to the 1.618 at 24,900. That's one way of counting it. You could say this was an A down, a B up, and a C down. So this was an A, B, C, A, B. Some other person could say this is an A, this is a B, and this is the beginning of the C, and the C is 5 waves. So essentially you could have a 1, 2 over here, 3, 4, and expecting one more hit down. So if I want to measure that, I could say the length of the wave 5, the 5th wave, to complete this C wave correction could take it anywhere between the 24,900, even 19,870. 19K, 20K, we also have a CME gap there. But what Bitcoin does between that and going down there is something else. We might range around here, then break down. You remember when we were up here? We ranged for a long time. So that's for Bitcoin. Now I want to take a look at, before I move from here, I want to look at the EMAs I said. Let's look at the EMAs. 4 hourly, we're below the 50. 1 hourly, we're below the 50. Now we need to try and look for divergences. And I bet you we have formed some bullish divergences unless we erase them. But let's look at the indicators. This is RSI. Let's look at the RSI. At the moment, today we formed some bearish div early on today, which brought us a bit down. Hidden bearish div, which is continuation of the trend on the hourly. On the 4 hourly, Do we have anything over here? We don't have any hidden bullish divergences or bullish divergences on the daily. However, we have, if the daily doesn't break lower, you have what is called as bullish divergence over here. So if it stays lower lows and higher lows on the RSI, that's bullish divergence. That could give you a push up tomorrow, and you see that tomorrow it might happen. Within today to tomorrow, you might see that happening. We get a slight push up, goes up, maybe forms a bearish div or hidden bearish div and continue lower. So I gave you the levels for Bitcoin. Now let's go to Ethereum. Ethereum, on the other hand, Ethereum is below that 1666. Is struggling at the 1666. Now, as long as we're below it, it's a big problem. But we're ranging at it. That might be giving us a clue. We're getting some kind of divergence. Lower lows over here and higher lows. That's bullish div on the daily. On the 4 hourly, yeah, we have on the 4 hourly, you could see some bullish div over here, slight lower lows, higher lows. 1 hourly, on the 1 hour, we have it here, hidden bullish div, we had it, gave us a push up. Now, the problem that Ethereum has, we have higher highs over here, and over here we have lower highs. So if it remains like this, that will be hidden bearish div, and that could push Ethereum even lower. But this is on the hourly, not on a higher time frame. On higher time frames, most of them are bearish. Now, looking at Ethereum, Nasdaq candle chart, we can see that slightly trailing higher, but that's on the daily. Now, if Nasdaq gets a pump up and we get all the way up to the full retracement of, at the moment we are above the 0.618, so you could expect the 0.786 for Nasdaq. We could come all the way to the 15652. That would be a good point to short. Someone could take a short over here and invalidation above this high and say if we can break the 15820, then your trade is invalidated. Daily, no bearish div. But when you look at this on the 4 hourly, look at that continuous bearish divergence as we are pushing up. So if Nasdaq on the 4 hourly decides to go up here and closes higher over here, your RSI could come a bit higher, then you would get bearish divergence and continuation. Now, I think if Nasdaq is to continue lower, targets could take it down to 14 to 13,000. Just looking at this structure, and we take a Fibonacci retracement, you can see we came to the 0.786. So you can say that is a 1 and a 2, or even an A and a B. So you take that 1, 2, and you notice that the move down over here came all the way almost to the 1.618, then we got a bounce, and then we continued down. So this was finished maybe. So here we had an ABC, so we're forming maybe some kind of complex correction, and this could be like this. You could count it like this. You get even a bigger move to the downside, probably as a correction. Then you continue higher maybe, and that could bring it down to 14,256 or 13,405. I see that happening. It's not out of the question. Now, Ethereum, I was talking about 1666. And to watch out for 1785 if we get there. As long as you're below this 1730. See, today we spiked, we spiked 1630, sorry. For this structure to change, you need to break 1649, 1650. If you can break 1650, then you have to contend with 1666. If you can break that, then you come to the 1730. 1730. That's how you change the structure slowly, step by step. But let's take a fixed range volume profile for this bottom range and see how does Ethereum look. We are below the POC at the value area low. If we come down to 1627, that's a point you could chance along, but don't forget you have some liquidity levels. Look at those long wicks. That tells you that's money. Big demand wick. There's a big chance we come down there and maybe range there only to take off. This is insufficiency, been recovered. Insufficiency in this big candle, recovered. Now we have these two candles, we might come up and hit it again, 1713. It's very possible. Another token I've been trading recently was NMR, good trade, and Joe. So those are the tokens I'm looking at, and the reason being is that they were like overly extended to the upside while everything was dumping or everything was holding. So it was a move out of the norm. You could find other coins today that are doing the same thing. You could do that same strategy with stocks, indices, commodities, Forex. It's the same strategy. When you find something moving out of the norm, like today Bitcoin is down, Ethereum is down, we had a slight push up, but still, and you go and look at something that's up 12%, or some, when I shorted NMR, it was up, I believe, 87%, and it went up 100% for that day, while everything was down. Well, it was a good trade because I knew it was overextended and eventually it will come down. I got stopped once, but and then I re-entered and it went well. Now, like BLZ, Bluezel, I don't know how you pronounce it, is 12% up. I wouldn't trade it without TA also. I do technical analysis. I look at that percentage, then I do the TA and see if there is any confluence to build, to support my hypothesis that it's going to go down. Now, if I look at this and I put on my indicator and say, okay, on the daily, we are above the 800 EMA. So obviously on the 4 hourly, we are above, but we are forming a violet candle that may recover this. Well, if I saw this, then you could say you would at least recover 50% of it. So you could short it from the top of that on the hourly. Any other reasons to go short? To me, it looks like we might have one more push and then maybe come down. 15 minutes is maybe breaking down now. You are having that bearish crossover on the 15, and if you go to MACD, you had that crossover initially on the MACD, and now you're having that. And if you go to, I like to use strategy, MACD, stochastics, and EMA. So I look at them, are they all crossing down? Especially on the 15 minutes, I like to look at this. Now what happened with the stochastic is that we had a cross down over here, and this is telling you we're continuing to cross down, but we are oversold on the stochastic, and I go and look at that and say, I may take a chance. I'm not going to take this trade anyways. I'm already, my portfolio is already exposed with other trades. I don't want to risk. It's all about capital preservation. Now daily, we are sort of oversold. 4 hourly, we're not really oversold. We are in the bullish range. We're maintaining it. So we could come down to 50 or even 40 and be still bullish. On the hourly, it's looking good, I must say, even though it has this crazy move today, but it's not very crazy. But it did what NMR did. NMR ranged like this, but and then it had one sudden explosive move to the upside. So that's how you analyze charts and determine whether you should enter short or long. You could use Fibonacci retracement, extensions, EMAs. You try and find the strategy that works for you. So this move up could be like, because I've seen it on Bitcoin at the June lows, you had a 1. You see that? You had a 1 wave moved up, then you had a 2 wave almost to the 0.786. Then you count, where would your third wave go? This is counting before it happens. You can project on where your take profit could be, possible profits. Now this move up went all the way here, 3 to 1. That's a crazy extension on one candle. See that? That's what happens with altcoins. If you're not careful enough, you could get burnt out. And then if you look at that from down here and to that peak, you can see that we retraced again another 0.618. So it says another 1, 2. This is on the daily time frame, so the waves are not clear. And then you had a third wave up, fourth, and possibly a fifth. And then you complete your third, and then you might have a retrace of a fourth and a fifth. That's how you analyze charts. Any bearish divergences? Well, just looking at it, looks like you have bearish div, lower highs on RSI and higher highs on price action. That is bearish divergence. That is a trend reversal indication. This is on the daily time frame. So just be careful with that. If you're trading long on this, just be aware you are at a point where you should be considering taking profit, or at least closing your position or taking profit. See, look over here, you had a lower high and you had a higher high. That is hidden bearish div, and you had a continuation. That's how it plays out. So just be careful. Over here you had a lower high on RSI, higher high on price action. That is bearish div, and that gave you the move down. This would have been November, I believe, 2021, same time as Bitcoin. Yes, it is. Alright, hope you liked the update. If you did, hit the like, subscribe to the channel, join the free Discord, and hit your notifications. And if you'd really like to support the channel, there's a link in the channel description. More trades. I'm out.